like to invite Mr. Laurent Nguyen, partner at Forvis Mazars, who will be moderating the discussion, and please join me on stage. And I'd also like to invite our distinguished speakers, Mr. Geoffrey Seeto from New Forests, Ms. Mira Nahouli from IFC, and Mr. Tung Nguyen from VinaCarbon. And please sit under your pictures. And perhaps we can start by giving them a good, warm welcome. Over to you, Laurent.
Good afternoon, everyone. So we'll be starting with a panel this afternoon, this fire chat. We have 40 minutes minus 3.5 minutes. Thank you, Bruno. And we'll be talking about trading and credit, carbon credit, these things. So I'm happy to moderate this panel, which topic is about financing sustainability. I'm sure Bruno has just mentioned, and I'm sure other people mentioned this morning, sustainability, green has a cost. So everybody's on paper is always interested about it, happy about it. But when it comes to paying the bill, sometimes you have less hands raised. So we have this panel today with people representing the investor community, and we'll be talking about how do we finance that. So I have the pleasure to have with me today, so I'll start with Mira Nahouli from IFC, Geoffrey Seeto from New Forests, and Tung Nguyen from VinaCarbon, an investment platform of VinaCapital. So I'd like to start this chat with a few numbers, because finance people like numbers. So as a partner of Forvis Mazars, leading our financial advisory practice, I daily interact with investors, with businesses in Vietnam that are looking for raising funds, and so on. And we often come across these green transition topics nowadays, and this is more and more part of the mandate of funds through their LPs. So if we look at numbers, I was actually checking a bit numbers when preparing for this, and it takes for green transition to happen and the net zero objectives for around 4 to 5 trillion US dollars a year. That's quite an amount of money. Not sure how much VinaCapital has, New Forest has, and so on, but that's quite an amount, as you can imagine, right? Currently, if you take numbers of 2024, I think around 2 billion US dollars were deployed in green transition. So you can measure there's a kind of gap in deployment today. So that's why we're having this panel today. Talk about investments, what kind of use cases do we have. And I'd like to also to mention that we should have a QR code on screen. We'll be having a conversation on some key topics, and we'll be trying to saving a bit of time for questions from floor. I think those are the most interesting. So please feel free to scan the QR code, send it through our conversation, and we'll be picking some at the end of this discussion. So with no further ado, I'd like to start with maybe a quick introduction from each of our panelists today, and maybe a question to each of you as you introduce briefly yourself on what would be, in a sentence, the biggest myth or misconception you've heard about green investment across Southeast Asia. So Mira, I'd like to start with you.
Thanks, Laurent. It's a pleasure to be here. So my name is Mira. I'm the regional anchor for IFC's manufacturing, agribusiness, and services team, covering Vietnam, Cambodia, and Laos. And I work with the early stage project development and advisory team, working very closely with the investment team. With regards to the biggest myth, I mean, it's been mentioned again and again, and lately by Bruno. the perceived high cost. This is what most of our clients are afraid of. But from IFC's extensive experience, and we work in more than 185 countries across the world, we have solid data to show the energy savings, the overall cost savings from better wastewater management, less water usage, energy savings, etc. Let's not also forget the positive impact on the environment. Also want to say that it drives business up. I mean, as we've heard from IKEA, a lot of the global brands now are just demanding it. If you want to be part of such supply chains, it's not even, it's mandatory now. And finally, we've also seen that once you start investing in ENS standards, sustainability, etc., you're starting to attract much more climate-aligned investors. So you're opening up also a whole range of access to finance. I'll stop there. Thank you.
So moving to Geoffrey, maybe.
Thank you. And for those of you who don't know about New Forest, we're one of the world's largest forestry and nature-based investment managers. And just to answer your question about how much money we've got about $8 billion US dollars under management and about 4.3 million hectares. So just to put that in perspective, that's the size of Denmark. And emerging markets for us means Southeast Asia, including Laos, Cambodia, Vietnam, and also Sub-Saharan Africa. So those are two of the businesses that we have and have a presence in. The icebreaker myth for me is that sustainability and generating positive impact outcomes is detrimental to achieving good financial returns. Time and time again, we've shown through all our investment companies, I said this 2 years ago in Vietnam, our second fund in Asia is now fully deployed. Sustainability is good for business, whether that's from a risk management perspective and the ability to secure land tenure, to social license to operate, but also creating that optionality in the landscapes that we invest into. We don't see landscapes as just forestry. We see them as mixed-use landscapes with vertical integration. And we'll go through a processing asset. There's community livelihoods. There's biodiversity and climate. Some of these in future and today are monetizable. Climate was not a thing for us 3 years ago, 4 years ago. Now it is an optionality that we can return to our investors. So sustainability is not detrimental to the generation of a good financial return. And generating a good financial return is how you're going to drive scale into the space. And that is required not just for climate change mitigation, but a whole bunch of other good sustainability outcomes that we need today.
Thank you, Geoffrey. So, Tung, would you like to introduce yourself and have the answer to the icebreaker question, please?
Hello, everyone. Good afternoon. So, I'm Tung Nguyen. I'm the head of VinaCarbon Climate Impact Fund. So, it's a subsidiary of VinaCapital. So, we focus on investment in Vietnam and focus on forestry and carbon credit sector. So we don't have as much money as New Forest. We only have 4 billion under management, and we invest in multi-sectors. But for carbon credits and VinaCarbon Fund, so we focus a lot on sustainability and climate impact investment. So in terms of the misconceptions, I'll probably talk a little bit more from the investor when they spoke to us. It's too risky. This sector will not be commercially viable without heavy government subsidies, and the policy changes all the time. The risk premium for them is too much to take on. I think the assessment is not wrong, but I think it's come from the lack of familiarity with Southeast Asia and also in Vietnam in particular, where transitions happening in real time. I think the key success for investor in Vietnam is really to find a trusted local partner who can really help them navigate through all the challenges, all the changes, and the investor needs to be more patient. And the key success is really to understand the risk, managing the risk better than others, and we believe that climate investment will, in the medium and long term, will bring a huge sustainable return. Yeah. Thank you.
Thank you, Tung. So I'd like to start with investment use cases and how do we look at investments when it comes to sustainable businesses. So Geoffrey, I saw, New Forest has announced this investment in Vietnam a couple of weeks ago. I'd like you to walk us through from a very practical and pragmatic investor standpoint through that investment in Tavico, and tell us how did community, biodiversity played a critical role in the investment decision.
Thank you. So for those of you who don't know, Tavico is one of the largest importers of wood in Vietnam, and it's a sawmiller. So its milling capacity is, I think, greater than the next 5 or 7 millers underneath them. And when we started considering a processing asset in Vietnam, as you know, Vietnam is probably one of the largest wood markets in the world. It's certainly the second largest furniture market in the world. And it re-exports. So they import wood, they develop it, they process it, they make furniture and other types of things, and then they export it back to the developed markets. So that's Europe, Americas, and others. And so the principles of financial investing were still very much similar. We had a very good management team, an entrepreneur with very clear vision and what he was trying to achieve, but also embracing and the sustainability standards around Forest Stewardship Council, but also around community-based forestry. So they manage about 3,200 hectares, but also a good business model with a clear path to profitability, because ultimately, as an investor, we also have to generate profit. And so when New Forest looks at investing into assets, whether they be in Vietnam or otherwise, we look at a number of different things. One is complementarity to our existing portfolio. And so we grow trees in other parts of the world, including Laos, and Tavico is a processor. So there were some synergies involved in that. But the 3 key pillars that we have when we look at investments are, the first, what is the contribution of our investment to the circular bioeconomy? Now, what that means is wood, sustainably grown timber plantations, the ultimate renewable resource. There's a lot of different things you can make with wood and wood fiber. As a renewable or sustainable product, displacing harvesting and deforestation of natural forests, because our yields are much higher, so we can meet the increasing demands of timber usage. Displacing high emission materials like concrete and steel, so the use of wooden buildings and the clever use of mass-engineered timber like CLT and glue-laminated timber. And so that the more of that circular economy we can affect through our investment, the more successful that investment becomes. The second pillar of our investment is how do we then generate additional positive impact outcomes? And so our second fund in Asia is a blended finance fund that actively targets, so on a do more good approach, not do no harm. We've gone one step further. So we actively target climate change mitigation through the use of carbon and other types of climate change mitigation activities. We actively target biodiversity, conservation and preservation, and we target community involvement or shared value, which basically means to us, the pensioner on the other side, the teacher or the nurse on the other side of our pension funds that entrust us with their money to generate a livelihood for them, those outcomes is just as important as the stakeholders and the communities on the ground and generating a livelihood for them. And so with these things, if we can tick all these boxes, and Tavico certainly did tick all these boxes for us, then it is a good investment. And what we can add to that is then to help them through growth capital to expand their business. We certainly have a lot of experience around timber milling in Australia. But also, they were looking to then locally source more and more of their supply through community-based forestry models, which they have 3,200 hectares. And so we have these engagement schemes, we have models around engaging community, but also additional supply by attracting larger or investing into larger areas of land where we can find them and being able to grow trees. Because ultimately that's how we started. We're a biological-based tree growing business with a high impact and sustainable overlay. And so bringing all that expertise to be able to bear on what is just a simple processing asset and vertically integrating that within our portfolio and also within Vietnam itself ticked a lot of boxes for us.
Thank you, Geoffrey. Tung, VinaCapital has been here for a while in Vietnam and has made certain investments already sustainable, green. And there's this VinaCarbon platform that has been made specially for investments. So I'd like to hear from your experience, what are the key considerations when you're evaluating businesses, investment requests from those Vietnamese businesses? How do you tackle this?
Thank you. I think it's a couple of overlap with New Forest. I think in principle we do pretty much the same, but I think I want to add a little bit more specific for Vietnam. I think number one for us is about, especially in the climate sector, is about the regulation and legal clarity, especially in carbon credit and forestry sector where it's classified as sensitive area. So we do spend quite a bit of money with the external counsel to make sure everything we do is legally tight, right? Whether we can cooperate with the forestry-owned, state-owned forestry company, and to make sure that the ownership right is there for us, the protection for the investor. So that's very key for us because our duty to protect our investor money, right? So that one of the slightly different compared to other developed market. And I think number two is really about what angle can VinaCapital or VinaCarbon bring in, because I think company can borrow money from the bank, right? Why do you need us? So I think we're working on a deal right now. I won't tell the name because we haven't closed it. So we work with a forestry company in Quang Ninh that badly damaged by the Yagi, right? So they badly need capital to regrow all the trees. And the problem with the bank's loan is they have to pay interest every quarter, right? And also the bank loan can only last for 3 or 4 years, right? And number three is because of the charter capital that don't allow them to borrow too much money because it's just the way it is. You have a charter capital that only you can borrow. So what we do, we bring a little bit of a long-term capital for them. So they only repay after they harvest the trees, right? And we work with them to really help them with additional thing about the typhoon insurance, right? To making sure that if that unlikely event happen again in, 5 or 10 years, and then everyone's protected. It can eat up some of our return, but it's make me sleep better at night because I don't have to worry about the typhoon coming. So that kind of additional angle we bring in, and of course, you work with the local partner. The partner have to be openness to work with institutional investor. I follow our clear requirement like FSC and I guess IFC performing standard to make sure that it meet our investor as well. So that's a couple of additional points if we want to do investment in Vietnam.
Thank you, Tung. I'm glad you brought the point on regulation. For investments in this industry, it does have an importance. So I'd like to focus a bit more on regulatory and market gaps that we are seeing currently. So from your views, what are the current market gaps, regulatory gaps that you are seeing in the market and that you're facing?
Are we talking about carbon credits market? Okay. So I think the biggest, the most challenging from a private sector perspective is about the legal ownership of carbon credits. So the legal framework have not been very clear. So if I were to invest money into especially land-based, because in Vietnam, all the land actually owned by the governments, people already have the land use rights, right? So okay, if we invest it, who's going to own it? Is it the Vietnamese government? Is it the land user or investor? If there's an allocation, how much is going to be, right? It's not clear for me. So I think that is one of the biggest challenges that blocks the capital from outside to invest in the big land-based impactful project in Vietnam. And of course, there are a few other areas in terms of boosting the demand for carbon credits. So, I mean, a bit of delay in implementing the compliance market in Vietnam. They're piloting this year, but I think it's going live in 2029. So it's been a long time. And finally, about the international transfer of carbon credits. So Vietnam have signed the MOU with Korea, Japan, Singapore, and a few other countries. But what investors really need is something called implementation agreement. So that kind of clears the legal framework, and it's very clear in terms of how much carbon credit, if we develop in Vietnam, can be transferred legally from Vietnam to Singapore, for example. How much does it have to be kept for domestic market, right, for the NDC? So I think the Ministry of Agriculture and Environment working quite actively on it. We have a meeting with them last week, and they hope to make some of the clarity on that. So we hope to potentially do some pilot scheme with them. Yeah.
Thank you, Tung. Mira, we're talking about regulation here, right? So I'd like to hear from you in terms of policies and regulatory gaps. What do you think the market needs to address to deliver on the promises and unlock more capital to flow in the countries? And perhaps we can take some examples on manufacturing sector, for example.
Thanks, Laurent. A lot of the regulatory ask would be similar to just enabling environment for investment. So really you would want full government support and commitments, and in enabling regulations, for instance, incentives for an uptake of renewable energy solutions. You need the removal of hurdles and barriers, and today there are a few of them, right? PPAs are not bankable. You need functioning DPPA. So if you've got your factory and you've got excess energy from your solar panels, you want to be able to sell that directly to other manufacturers in the same industrial park. You need transparency from the part of the government on what are the asks for the licenses, making sure that all the investment approval processes are facilitated. We also see a lot of benefits where all stakeholders are aligned, both from the government side, the private sector side, but also trade associations, because this is where a lot of the knowledge gap is bridged, and a lot of there's a lot of sharing of ideas, but also of the operational hurdles. Also technologies, right? A lot of our clients have the ambitions to invest, but in technologies they don't know which ones to invest in, which ones are the right ones for them. I'll just share some notes on a very successful IFC program in driving policy reform. And this is for driving sustainability in the textile sector in Bangladesh through our partnership for Cleaner Textile Advisory Project. And it helped push for 5 really important policy reforms. The first one being is that we helped open the Bangladesh's rooftop solar market, which enabled third-party rooftop solar developers to enter the market and provide operating expenses services to factories. So instead of factories having to invest capex to put solar panels, they could lease them, and this has, incentivized a lot of them to do that. We've helped drive customs duty increases on harmful chemicals, helped drive custom duty reductions on 52 different capital machineries, so machineries that were key to drive sustainability, and many other interventions in terms of helping private-to-private power sales, private power purchase guarantees, etc. So I'll stop there. Thank you.
Okay. All right. Thank you, Mira. So I'd like to focus more on now on decarbonization of the industrial sector and global supply chain. So Mira, from the ground here in Vietnam, we hear a lot about Vietnamese suppliers being asked to go beyond Scope 1 and Scope 2. According to you, what do these players need? What kind of support do they need the most to achieve that? And how does an organization as IFC can support them?
Thank you. As you know, so IFC is the world's largest development bank, and we're the private sector arm of the World Bank. We've invested $60 billion in the last 12 months, and 100% of our investments were Paris-aligned and climate aligned. So these are our targets, and we have to abide by them. And as you can imagine, not all of our investees, not all of our clients are ready. They're not, they don't all abide or are 100% compliant with our very stringent ENS performance standards. And so we have very, very strong early stage project development, but also advisory support that accompanies our investments to help them. So we go in and we understand what the gaps are, and we help them get to the standards where they need to be. So as part of that, we have a whole range of sustainability, circularity, and decarbonization advisory services, and we help companies with their strategic decarbonization roadmaps. We help them set sustainable finance frameworks that help them then raise climate financing, green bonds, blue bonds, and the like. We've got also a lot of sustainability-linked financing, whereby we help look at the baseline GHG emissions, and then, for instance, or certain indicators, and we keep track of these, and the better they perform, the better the rating, the interest rate, so we can decrease the interest rates based on that. On factory levels, we can go in at a factory level, deploy our team of experts, of industrial experts that look at operational efficiencies that may be possible, look at energy efficiency, resource efficiency, etc., and the technologies that are needed, and we help finance these. We've got, of course, the Green Edge, the Green Buildings Edge certification, which has a very also practical tool where clients can go online, and it prompts for certain questions, and as soon as you put in those indicators, it can give you pretty quickly an indication of how much you can save on energy, on wastewater usage, on water, etc. Thank you.
Thank you. So maybe, Geoffrey, one word on supply chain, right? We've all realized, I think, during COVID, how much global supply chain is intertwined. And it's pretty complicated when it comes to sustainability assessment for final products as consumers. So how do you see sustainability certifications like FSC helping the access to markets and investments?
So thank you. So certainly things like FSC and other types of sustainability certifications and standards give you that access to global supply chains, and particularly in the markets of Europe and the US. And so it is a necessary thing before you can even access those markets. And a good example of that is Tavico. And IKEA is one of Tavico's customers. But unless we have a full chain of custody, FSC from the forest through the small-scale supply, but also the wood it buys, through the whole chain of custody down the processing, they will not purchase that. And so what's driving a lot of this? It's the increased disclosure requirements. So you may have heard of things like TNFD or nature-based financial disclosures that companies now have to disclose on their balance sheets. And that's happening in Europe. And so that's driving a lot of this, because what's happening is that transparency is giving consumers that informed choice of the institutions they want to bank with or the products that they want to buy. And if you have a choice between a company that's sustainably supplied and one that is not, then the choice is that easy. That's not even a green premium anymore. It's just a business decision. And so when we talk about TNFD, our funds are all TNFD. They're EU taxonomy aligned, and they're even SFDR Article 9. So these are deep green funds. And so by investing with us and into the companies, they get to be able to disclose that. So we're looking at a world beyond carbon. We're looking at nature. And when we talk about nature, we talk about natural capital. And the ultimate holy grail for us is not about carbon credits and offsets. It's about natural capital on the balance sheet, on the asset side of that, offsetting the liability side of the emissions and all those other things. We're not there yet, but we're getting there. And increasingly, these sustainable principles and things that give you access to these supply chains are critical in achieving.
Thank you. I think we're running out of time, and so I see some interesting questions that have been raised. So allow me to combine some of them and perhaps have a closing remark from each panelist on the questions and a takeaway for today's session. So there's one interesting question about what kind of metrics are factored from the investor's decision when assessing projects, if not only ROI or IRR, right? So I think we'd probably like to touch upon this. Another one is, what kind of recommendation would you have or suggestion would you have to FDIs to raise green financing in Vietnam? So I'd like perhaps to have this as maybe a closing remark from each of you. Tung, would you like to start on this from the investors' standpoint?
Sure. So just to clarify, question number one is about, apart from IRR, what else we take into consideration?
Yeah,
and number two is, how do we bridge the gap of the green financing, right? Is that the...
Right.
Yeah. Number one, I think, because we are climate impact fund, so we have to look at the, apart from IRR, we have to look at the real meaningful climate impacts and the positive impact that can be measured for the environment, the community. What's the difference, right? What's the additionality that we're bringing on? So that additional sector. And of course, we have to follow the same standard. Like we normally use the IFC performing standard to make sure we align with them, because it's got globally recognized standards anyway with all the investors. Number two, I think about the bridging the financing gap is really, I think this one hard because it's policy driven. So I think from us, we really have to work with the government to really make, I think the key is about the stronger legal framework. Right, that's number one. And number two is really from us, what we can do as a local investor to bridge the international investor is really to educate the international investor about the risks and the opportunity in Vietnam and try to be a trusted local partner and help them to make an informed decision and to manage the expectation. Because investing in Vietnam not the same like you invest in the US and in Europe. So I think that is the key thing, I think.
Thank you, Tung. Geoffrey?
Yeah, so in terms of some of the metrics, as I said, those disclosure requirements around TNFD and TCFD are driving a lot of this. In all our investments, we track over 80 sustainable landscape investment metrics, as we call them. And we report this through to our investors through a sustainability report. We publish one every year, and I recommend you go to the website and have a good read of it. But also our investor can then take those metrics and put it directly onto their reports and balance sheets because they are already aligned to the taxonomies, SFDR and others. So this is across a whole bunch of different areas, but nevertheless, these are metrics that we track. In terms of getting more climate funding or green financing into the space, and this is probably more a message to government than others, and specifically around the carbon market, And since I'm based in Singapore, we always talk about the 5 Cs. We'll do 3 Cs here, right? So I think government needs to have a clarity of vision and purpose and implementation of that vision and clearly what they're really trying to achieve, whether it's meeting their NDCs, how they want to develop their nature-based sector. The second is capability and capacity. We need to have the right people making policy. They need to understand where these markets are. They need to have a commitment to excellence and understanding what it is and how to carry out that vision and mission. And the last one is consistency. So we need very consistent policies. Because if you're a foreign investor in any country, the thing you hate the most is volatility. So we don't know, we're not very fast about how much you want to tax or how little you want to tax or whatever it is that you want. But keep it consistent so we know how to price that risk. Because if we can't price that risk, we're not going to invest. And I think that's very critical when countries think about how they want to attract foreign investment, but also even local investment, because of the uncertainties.
Yeah. Thank you, Geoffrey. Mira, I think you've mentioned some metrics when you talked about your illustration for Bangladesh. Would you have maybe other metrics you could be sharing to us?
No, just to remind, the manufacturing players, for instance, but all players, that when we're looking at, ENS standards, we're not looking just, you mentioned scope 1, scope 2, but now we're looking at scope 3, right? So it's not only what you're doing in your factory or in your factories, but it's looking at what processes and procedures do you have in place to track what your suppliers are doing, and thinking beyond just your, solar roof panels, but really circularity. How long are you keeping your material flow inside? What's the strength of your labor contracts and environment? How did you get access to the land? Did you have to displace minorities? So it's really sustainability and ENS and environmental and social and corporate governance on a wider scale that investors today are looking at. And of course, in addition to the wider development impact and job creation. Thank you.
Thank you, Mira. So I think the prompt doesn't count negative, so we are right on time. This is 0. So I'd like a round of applause to thank our panelists. And for the questions we haven't been able to tackle in the conversation, I believe there's a networking session planned at the end. So we're happy to actually engage in conversation at that time. So thank you, everyone. Thank you for our experts today.
And please stay on stage, and allow me also to thank you all for sharing so generously, and to Laurent for skillfully managing this discussion. And I'd like to invite Dale Nottingham, the Executive Director of NordCham, to come on stage and present a small gesture of appreciation to our panelists and moderator. Okay, so we now continue with another fireside chat, where we'll be exploring the theme called